JB Cycles here with an early weekend update on January the 9th. I will be away this weekend, so this video comes 2 days early. My title says Bears still has a chance the next 2-3 days. So last weekend I changed my rough forecast into something a little bit more bullish, but I don't like changing my or adjusting my forecasts. That means I have made a bad forecast. The forecast should stay unchanged week after week. And, you know, these two were the original ones, and they both kind of waited for this 4-week cycle low around January the 20th. Still, I don't think this looks very bearish, but we do have a triangle setup, and that's very dangerous and hard to interpret. It's in essence a delayed move, so when the market decides which way was the correct one, then it has to take back this delay, so we get a huge breakout. Well, you know all about that. Of course, let's have a look at the bigger picture. Here is the 3.5-year cycle in red. It is in the topping phase, and the dotted line is my general scenario for a top in February and then rolling over into a bear market. We have an important cycle. It is this one, the 17-week cycle. So in this log chart we see we are at the brink of breaking this trend line, but in the linear chart we still have some space to this line. I think we are making the first shoulder here, and we will have a higher top in February or early March, but that remains to see. But as we see, this green cycle has a low, and we are getting very close to this low. Now the market can make a market low a little bit later than this ideal low, but time is running out for bears. But there is still room for a washout here, but I don't think that will be the start of a major downtrend or a bear market. But there could definitely be a washout, dropping down for a week or two, and then we have this final top. So if we get this washout, it should begin in 2-3 days. Otherwise, I think we will break up to the upside. We have the VIX wavelet. So the VIX is still kind of going up, but making a lower top than this first one. But the wavelet is, for the time being, it's turning down, and inverted, it's going up for the S&P. These turning points in the VIX, these two, have generated projections for the S&P. Both are very similar. This first one suggests time is running out for bears. We should soon start another uptrend. And the other one, very similar. But that does not exclude 100. It doesn't say it's impossible to have a breakdown here. This projection or scenario is just the most normal thing. But I'll come back to that straight away. Here is the S&P daily data, the wavelets. So here in black I had a possible scenario from the previous bull market top. But I have this primitive tool, these purple rectangles of 26 trading days, placing it at the purple wavelet top, and it should suggest, wow, yeah, this is the ideal place to buy. But we have this tricky triangle. We are at this important kind of a moving average. It's a special moving average, and normally that should be a support. I think it's very close to the 80-day simple moving average, but this is a more complicated moving average. But in the bull market, this is the normal place, the ideal place to to start your long position and then expect the next uptrend. However, this is an alternative scenario in red. This is what is possible with bear market rules in this setup. And as you see in red, we are up here in blue. So far, you see we are far away from this bearish scenario. But in this bearish scenario, we are at the point where we get the final breakdown or the final leg down. And when we have a triangle formation, the break or the trend is delayed and it will catch up. So very possible, because I am expecting we are getting close to the bull market top, and then a correction using bear market rules is possible. But I think if we get this breakdown to the downside, it should happen the very few next days, 2-3 days. Otherwise, I think it's to the upside. And if we get the breakdown, I still think that is a buying opportunity. I don't think the bull market is quite over yet. I think at least we should get a double top or a higher top in February or early March. We have the hourly data. Well, I am quite confused about the 2-week oscillation, because I think this is the most obvious interpretation. We have a 2-week oscillation starting here, but wow, this is very weak, and we are at the oscillation top. Well, this kind of is suggesting we could get this breakdown to the downside, because now the oscillation is soon having a bias for the downside for the next 5-6 trading days. But it's also possible that this will be a more tricky sideways 2-week oscillation. So I can't really say, but yeah, from how the wavelets looks, this looks kind of bullish. And we have broken this trend line, kind of back testing it. And yeah, Friday, well, we have job numbers I think on Friday, so any sign of positivity on Friday, I think the bearish scenario is over. But yeah, but we should at least, well, Friday, Monday, we should see for sure. So the S&P, yeah, it is this kind of triangle feeling, and in the bull market, this triangle should normally resolve to the upside. But then again, I think we are very close to the bull market top, and then we cannot longer trust that. So yeah, Friday, Monday, it is possible with a breakdown to the downside, and we could have a washout lasting for about 1 week. But if we do not break down the next 1-2 days, then I am expecting the upside. And then we could perhaps look for something similar to the previous bull market top scenario, meaning some kind of a sabotaged uptrend going more sideways, and then starting to see a top in February, I think, or early March. So that is my outlook. I don't like changing it too much. So I did get a little bit bullish last weekend, but yeah, time is running out for bears, but they do have a chance the next few days. But then look for a top in February, I think. See ya!